Hello, everyone. Welcome to the trading room for February 6th through the 10th of 2023. This is Darren Fisher. I'm joined by Joe Jensen, and let's get started. So let's talk about last week's news right away. Okay, the markets broke out, all right? And they really broke out on Thursday. They had a gap up, and they didn't run really hard, but they did maintain a game after that gap up. Now, the problem I've got with it is that on Friday, they gave back two-thirds of the gains. If they've given back one-third, I wouldn't be too worried about it. If they've given back a half, I wouldn't be too worried about it. But they gave back two-thirds. So that leads to the question. We're going to talk about this here in a little bit. Is that a genuine breakout, or is that a blow-off top? We're not sure yet. We're going to need another couple of confirmation days. Now, on Wednesday, the Fed did as expected. They gave us a quarter-point hike, and that's what the market was expecting. So when the Fed does what the market expects, then everybody's happy. Now, what happened on Friday? I think the economy's sending mixed messages. That non-farm payrolls number beat by 324,000 jobs. So now the Fed has to balance a whole bunch of different things. What inflation is doing, the fact that the non-farm employment changed over expectations. They're expecting 193,000. They got 517. So there's still hiring going on. That's very inflation driving action right there. So then they're stuck between a rock and a hard place. They've already said they want employment to go down to reduce some of the inflation. Well, that doesn't look like it's happening right now. I mean, you've got the JOLTS job openings that also came out. The expectation was 10.2 million, 28 million jobs, and it actually came in 11 million. So the job openings beat by almost 750,000 right there. So that part of the economy is still humming along, and the Fed's got to figure out how to get a handle on this. And the market wanted a couple, maybe 3 quarter-point hikes, with the Fed saying, okay, we'd be open to easing in the second half of 2023. If we're halfway through Q1 right now, and if the non-farm payroll continues to overperform based on expectations, and the JOLTS opening does, and they can't get the PCE number down, then the Fed's going to have to raise at a faster rate. So everything is in flux right now in 2023. So let's take a look at the charts here. And over the week, the Dow really didn't do anything. And this is the case it was on Thursday as well. It was down 0.17%. The S&P was up 1.64. The NASDAQ up good at 3.35. Russell outperformed everyone, up 3.9%. I think the story here is going to be oil, and that was really reflected in the energy sector as well. Oil was down 8%, and gold was down 2.6%. Now, for gold to move that much in a week, that's a pretty good move. You would expect some of that volatility in oil, but you take a look at a chart on gold, you're going to see a pretty extended candle. But let's take a look at the S&P and see what happened. So you can see we broke out about that 410 area, and we had been saying there was resistance up there from about 408 to 410. We broke out of that on Thursday, and then you can see that long upper shadow. We gave it all back on, you really gave it all back on Friday right there. And you take a look at the NASDAQ as well. I mean, that did even worse. Okay, the NASDAQ was up for the week, but it was down 1.75% just on Friday right there. So that's what makes me sad. It's what gives me pause. And I've been saying this before. If we could break out and then run, I'd be happy. I would remove any biases I had, and just say, okay, we're in a bullish market environment right now. I just need to get behind it and get bullish. I see action like this though, and I'm really hesitant when you give back all your gains and then some in one day. To me, that says blow off. Joe, am I blowing this out of proportion here?
Absolutely not, Darren. I couldn't agree more. The two things that I thought that was really interesting with this, and something that we've been looking at, let me go back to the SPY, is this is something that we've been talking about here at Maverick for a few weeks. And if you guys follow Corey Halliday at all, he has been waiting for this exuberant move, this blow off top, this surge to the upside. And the SPY chart here doesn't really put it in perspective, but if you zoom out and take a look at the overall trend of it, there's a pretty good spike in volume over that day on Thursday. And it was in light of one of those things, Darren, and this is just exactly your topic. It's the markets are waiting for this. It is this fear of missing out. We have seen these markets since the bell rang January 2nd, I should say. First they were closed. Everything went higher, 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 higher. The Fed was being quote unquote overly hawkish, and these markets were against him. All of a sudden, you get to a point to where we're back up to these resistance levels that we set in December, right? And so let me move to the NASDAQ now, because we're already above that, or almost, we are exceeding these levels that we had towards the end of the year, back up to levels that we hadn't seen since September. So the fear of missing out, the people that have been waiting and waiting and waiting couldn't wait anymore. They wanted to buy. And there's a lot of money on that sideline. So we're watching the institutions buy this up all through January. Then the Fed finally comes out and, in my opinion, says, hey, we're going to lighten. We're going to do a quarter. We're going to do a quarter next in March. And we'll see past that. But I think we're right in line. And absolutely took it and ran with it. I hadn't seen a surge like that in a long, long time. So, yes, is this a blow off top? It could be. It absolutely could be. It has to come back down, unfortunately. But what Darren says, and what I agree with you on this, Darren, is it is definitely shown some weakness there on Thursday because of those numbers. So let's take a look at the VIX. I didn't see too big of participation in this VIX. I'll tell you the one thing that I did see is right here, right around the 22 mark. You could see that it did spike right at the mid part of January. It spiked up, and there was some true fear there. Now, Corey talks a lot about this put-call ratio, and we've been talking about it here. I've been talking with some of you guys when we're coaching as well. That was one of the rollovers. Mid of the month, that VIX, those options expire, and you can see another round of puts maybe about purchased there. So we are seeing some protection being purchased into these markets regardless, and maybe that is what is giving it this bullish confidence. What's your 2 cents on that, Darren?
No, that's a good point. And, I think we were talking about this last week or the week before. If you're protected, then you can become complacent. And I've always thought of the VIX as a measure of complacency. How lazy am I right now? Right now, the market, in a bull market, you're naturally going to have, everything's going your way. You're naturally going to have a lot of complacency because if it ain't broke, you don't want to fix it. What really surprised me, though, is that with the market action we had on Friday, we only got a very modest uptick in that VIX. So I think a lot of people are complacent. I think they feel they can be complacent. And I think somebody's going to get caught with their pants around their ankles here pretty soon. So as we were saying, is it a breakout or a blowout? Thursday's candle looked good. Friday's candle did not inspire confidence. So what's going on this next week? We've got 4 FOMC members speaking. Okay, the markets want them to back off on the hikes. Okay, that's just what they want. They don't like the current level we're at right now, and they really are not looking forward to a couple more rate hikes. Bring it up to 5.25%. I personally think the Fed is going to have to go past that target. That's just my personal 2 cents right there. But with all the Fed members speaking right now, the thing that's going to be asked, this is going to be an entirely psychological week. Can the Fed sell a soft landing? Because now they've got conflicting numbers out there, and they've got signs that as much as they've done, it's still not working. Employment is still rising. It's still hot. Then you've got inflation. Is it under control? That's really what they're looking for right there. I think they're more worried about that than anything else. So can these 4 people sell a soft landing? And that's the thing about what I call psychological weeks. Any one of these 4 could screw it up. If they say something in the wrong tone, if they say something that if they misspeak, they could roil the markets out there. Okay, so as far as hard news, we've got the 10-year bond auction on Wednesday. I don't really think that's going to have much of an impact at all. And then preliminary consumer sentiment on Friday. All right, so our market outlook, I'm calling for a modest +1. Okay, we've got, we're above the 20, above the 50, that 2050 slope, we just barely crossed. It looks like we crossed it on Monday. Let's give it a little more time. Let's make sure we can stay above the 20 as well. But technically, our monthly outlook has to be at that +2. Does it feel comfortable? For me, no, not necessarily. But we trade the market in front of us, not the one we think it is, not the one we want it to be.
Yeah, absolutely. And what it is I love Rob's analogies. You got to plug your nose and buy it. And when you got to plug your nose and buy something, you're usually correct. And I think he was talking about that mid-January. And look what would have happened if we stayed at a +1 the whole time, which a lot of the outlook was. It has worked off. It's just getting to this toppiness, and this gets a little bit reluctant for me, because I've been through blow-off tops before. It just seems like you just don't want to be the last person to the party. But as far as our top-down approach goes and the technical analysis of everything, I'm right on line with this +2 on the long term and a +1 on the weekly outlook. Even if we pull back a little bit here, maybe that was it to the downside for this week, and we just go flat on Monday. That's just a bull pullback. So the +1 would stay in line. So there's my 2 cents.
So looking at the sectors, you can see we didn't have a whole lot of movement. I mean, there was a lot of movement overall, but it was fairly muted within the sector. You had communication services outperforming at, up 5.25, but you could see energy offset that. That energy was down, 5.75. A lot of that had to do with the price of oil. Everything else I guess you could say technology and consumer did pretty well. They were up above 2%. Everything else was, plus or minus below 2% right there. You see materials barely moved. Same thing with healthcare, barely moved. And despite the broad-based rally, you've got real estate, industrials, financials up less than 1%. So you're definitely getting favorites within the sectors here. And let's take a look at the individual charts. So utilities last week I was at a -1, and I'm still at a -1 on utilities this week. It's just on the slow, move to the downside where it looked to be that we could possibly be at support right now. We'll see if that holds. Utilities is just one of those ones that they're not attracting a lot of capital, but nobody's really actively selling them. They're just kind of being complacent with utilities right now. So they're in a slow downturn. Contrast that to communication services, and you can see even with Friday's candle, you've got to be bullish communication services. So I'm at a +3 on communication services. That's the second week that I've been at a +3. Now, this thing could pull back. All of communication services could pull back to that 56 mark, and I would still be willing to buy. Now, if you want to wait and see what the sector does before you enter anything communication services on Monday, Tuesday, Wednesday, completely prudent. No problem doing that. But this is definitely a bullish chart. We'll see what happens in the following. Real estate, I'm at a +2. A little bit of a rougher candle for real estate on Friday, but still, you're above the 20, you're above the 50. Everything is looking pretty good. We're just in a bull pullback. If you drew some trend channels right there, even touching the lower shadows, we're still within an uptrend right there. And we had actually poked above it on Thursday. So this is still, there's a lot of rising support, for real estate here. So until it says otherwise, I've really got to be bullish here. Industrials, I'm at a +1. I was at a 0 before. We just barely broke out of what a sideways trend that started the first part of December and has lasted till really the end of January. So we had a 2-month sideways trend. Just broke out of it, I would say. And we'll see if what was resistance becomes support and goes up from there. I could definitely get more bullish at that. But right now, let's just wait and see if it goes back into the channel. And if it does, then, we're just at a mild +1. Healthcare has been at a -1. This is the third week in a row we've been at a -1. And this is looks a lot like utilities right here. Nobody's actively trying to dump a lot of healthcare stuff, on a broad basis. It just looks like it's not attracting money. And when people are taking profits on something in healthcare, they're not putting it back into healthcare. They're putting it back into another sector. That's what it looks like to me. So we just have this slow bleed in the healthcare sector. Look for some weak stuff there. I think that's going to do well. Compare that to financials. Now, the next several sectors have been doing really well. We talked about this several weeks ago. Financials, I'm at a +2. This is looking, pretty good. Had a decent. They were down just a little bit, but on Friday, but they were only down, 0.5%. When the rest of the market was down, a lot more on Friday. So the financials didn't participate very much to the upside on Thursday, but they also didn't participate in the downside. So it's almost financials are segregating themselves from the rest of the market, and you've got what's the broad market doing, then what are financials doing right there. Financials right now just appear to be on their own program. That's fine. If you want something that's a little steadier, you actually might find financials to be more stable than a lot of other things, as funny as that is in a rising rate environment. So then we've got consumer right here, +2. I mean, even though you take a look at that ugly candle on Friday right there, long upper shadow, I mean, you're back to the high of Wednesday, so you've negated all of Thursday's gains right there. Still, technically, you got to be at a +2 right here, and we'll see where it goes. Now, there's nothing wrong waiting for triggers on any of your stuff. If you want, and we highly recommend it, if you're in what looks like a bull pullback to you, wait till you get that higher low and that higher high. If it's in a high base and you want to go long, wait till it breaks out of that high base. There's nothing wrong waiting for triggers. It's a good practice to be in. We've got technology right here. Looks a little bit better. We're still at that +2 environment. Technology could come back down to about that 139 level, and that would be December's resistance. It looks like it became support. We broke out of that on Wednesday as well. So that would be the first test I would think to see, look at anything in technology. But there's some good stuff out there. Going to basic materials. This is another one that's looking good at +2. Even though, it was down almost 2% the sector was down almost 2% on Friday, we're still above that 20-period moving average. And you got that you draw a trend channel on the lows over the past 2 weeks, maybe 3 weeks. We still haven't broken it. Okay, so this is looking pretty good. You've got that rising strength again that appears people are going to buy any dip, and they'll just try to get it at the best price. Materials is looking really good. I'm happy with them. Then we come to energy. Energy, we're at -1. Just it broke through that 50-period moving average. That's our line in the sand here, whether it be bullish or bearish. Did that on Thursday. Got confirmation on Friday. Now, are we going to shoot to the downside? No. You've got a lot of really strong support there at about the 82 level. I think we just bleed down to that level, and then if it breaks below that, then we could get a little more bearish. But until it does that, I think we just are in the slow, choppy move to the downside. So look at everything. You can definitely see the market is picking favorites, and they're picking stuff that's out of favor as well. So -1, you got energy, healthcare, and utilities. They're not in doghouse, but nobody really wants to put a lot of additional money into them. Mildly bullish on industrials. And look how many we've got at a +2. Tech, consumer, financials, materials, and real estate. All 5 of those are at +2s, looking really good. And you've got comm services out there. They're at the head of the race right now and looking really good at that +3. So the market is definitely, we talked about it at the beginning of the year, the first week, the market really, everyone was at the starting gate of a horse race, and nobody moved. And it took a couple of weeks for the market to decide who was going to be in favor this year and who was not necessarily out of favor, but definitely wasn't going to, get any extra cookies after dinner. Let's take a look at some possible trades here. So in utilities, last week we were sideways to short on DTE, and this did pretty good for us here. It was down about 0.75%. So I think we had something like the 110, 115, 120 butterfly or something similar to that. It might have been the 105, 110, 115. Depends on how you wanted to do it. So sideways to short on this one has definitely worked out for us. I think we've got a week or two left on this trade. So we'll just see where it goes, but looking pretty good right now. This week we're looking at CMS Energy. We're just going to call this a bear rally. It went up, really just barely broke above that 20-period moving average. Friday's candle took it right back down. I'm not going to ask for a whole lot right here. I mean, it's sitting at 62.75. So I'm just comfortable doing a 60-65 bear call spread, going out to February. I'm going to get a little bit of theta on there. I'm going to get a little bit of delta. It just seemed to be a good trade with it right in the middle of that range. Now, communication services. Last week we were long Zillow, and Zillow performed for us. They did pretty good. They based, but they also broke out of that base. They were up 3.5%. So I think there's some more time left on this trade. Definitely one I'd want to hold on to. And you can see, I mean, look at that candle on Friday. Even though it had a long upper shadow, it really didn't get much below Thursday's opening low. So this is still looking pretty good. This is one of the stronger ones out there. I'm happy to hold on to this one. What we're looking at now, Netflix, nice high base right here. And there's a couple of different ways that you can play this. You go out to March, and I know it's just barely started being February. Now we're talking about going out 7 weeks out. Well, if we're going to get some volatility in the market, then there's two ways to play it. Extremely short, like within a week, or extremely long, like 6 or 7 weeks, to allow yourself to sit through that volatility. What I would do, I would go out and go long those March 360s, and this next Friday, short those 365s. You're not asking it to do much. You're just asking it to hold out there. And, I think this is going to be good. And you could write diagonals off of these for the next 6 weeks. And that's the beauty of doing something like that. If you don't want to do that, just go out to February, the expiration coming in a couple of weeks. Those 365, 370 bull calls, get into that for a couple of bucks, and have an upside of about $2.75, $3 to the upside. That's a little more conservative, and I think that you could play it that way as well. And in healthcare, last week we were short CNC, and this one again performed well for us. I had that support there at about the 73.50 area. Well, it broke through that on Thursday, had a nice continuation on Friday. The great thing about this trade is if you didn't get into it, you could look at a different time frame and you just say, hey, this trade just triggered on Thursday. There's still some downside here to be had. So this is definitely one that we're happy to keep. It looks to be like it's going to pay off pretty nicely as well. What we're looking at right now, ABBV, and this is in a low base. It's another one. It's got some support right here. Okay, how do you want to play it? So you go out to February, do the February 140, 145, or you could, if you want a little more theta right there, you could do the 145, 150. That's going to be more of a theta play right there. Or if you want, go out again to March. This looks like it's got some weakness. Go long those 150 puts, and then short this next Friday's 145s against it. So there's a little bit of support right here. How long does it hold? Who knows? Several different ways that you can play this. And industrials. Last week in industrials, we were, this is Raytheon. We said Raytheon was going to be sideways. And, it was sideways to a little bit down. I think we had 100 as the midpoint right there. Depending on how you play it, you could play the 90, 100, 110. If you want to play it more short term, it could be the 9500, 105. So you're probably sitting with a very tiny profit right now. And if it moves back up towards 100, you're going to be looking pretty good. So this one, we said sideways. It's not out of the range yet. So we'll just give this a couple more days to see where it ends up right there. What we're looking at right now is GXO. This is GXO Logistics. This is a nice high base. It had a pretty good week. Bounced off the 20-period moving average on Tuesday. Continuation on Wednesday. A little more of a gain on Thursday. It didn't gap up though, which I was happy to see this. If you have something that didn't gap up, you have very orderly buying in it. So it wasn't a rush to the entrance right there. And you see Friday's candle, even though you had a little bit of upper shadow, still held in there really, really nicely. So I'm looking out, to play this, long the February 24th 50s, and then this next Friday's 55s. I'm going to short those against it in a diagonal call. I think that's the way to play. If you want to play it a little more just straight up and down, to go February 55, 57, 50 bull call. Either one of those is going to be working pretty good. I think you could, the way this moves, once it really truly breaks out, I think give it a couple weeks, and 57.50 is a perfectly good price target for that. And within a week, just hope it stays around 55. It'll be fine. Joe, why don't you take us through the rest?
Sure, great. Let's get into the financials. Talk about ALLY. This is one that was put on last week. Kind of a sideways trade here, and kind of like with the rest of the markets, this thing just kind of broke out. I do like how it kind of shot up and staged right around the 32 level. Sure, it shot up quite a bit back up to 34. This could come back down if we indeed had that blow off top on Friday, or excuse me, Thursday, and then Friday it just is going to come back down, even though it's holding on there pretty strong. Just like Darren showed you on the sectors, the financials are pretty strong. It could bleed further down, so it's right now a little bit out of range, but we'll see what happens over the next week. Here we got Capital One, always a fun one to trade. Very similar to Ally's move, but this one we're going to play a little bit more directional. So a 120, 125 bull call, or a targeted butterfly of 125. So a 120, 125, 130 call butterfly. What's neat about this chart is when they do break out and they just kind of sit there. So the 125 is a little bit more aggressive on the target. You guys can see it at the top of the screen, but it's something that could easily get there in the next week and a half. So if you wanted something a little bit longer term, you guys could actually go out to March and see if you want to diagonalize this. But I like the targeted butterfly for a number of reasons. The biggest being it's got a really good risk reward on it, especially when you target them. So let's move on to consumer. Last week we had Goose, Goos, and it was let's double check this, a long, and it was looking good until it wasn't. And this is kind of what happens with things that run into high volatility. What I do love about this is net, it really hasn't fallen as much as it appears because of that giant red candle yesterday. I know that it would scare the crap out of me if I see a candle that size with that much volume. But it has come back, retraced about half of that. And if this thing starts to float back up, it might come back into play. So a couple good things that come with this. This will really test your grit when it comes to following your plan. Position size for max loss, allowing that time to work for you if you've position size for max loss, that these could climb back into favor. Right now, not the best, and not the worst. Tesla's the one that we're going to look at here. I know, folks, it's Tesla, but Tesla, it really didn't participate as much as some of the larger tech companies. And for sure, folks, one of the first things I jumped on, I looked at our Apple and Google and Amazon, and I went to Kathy's Woodstock again. All big, massive gap. Shopify, Spotify. It's like another round of buying just came back into the darling stocks or the stay-at-home stocks. This, however, didn't. I still like it on the vertical set, and the reason being, well, I like the 190-200 call first. I'll show you the chart here, and then or the 190-180 bull put. So credit or debit, depending on how aggressive you want to get with your target, above 90 or up to 200. And here's why. It's because you can see right there that its resistance is that 200 that it set end of last year, and I actually bounced off of it in October as well. So you see a line across there. So I do think there is a psychological point for Tesla there. If you don't want to be as aggressive because it's not getting there, then yeah, do the credit spread of the 190, 180. But if you want to shoot for it, 190, 200 vertical spread, I think that's a good one too. With Tesla, it's best to do some sort of combo. It gets expensive real fast, and it is pretty volatile with the spreads. So let's move into tech here. This is SQ. So this was an expected little bump up. It's up about 1.05. This was a pretty good trade. It's just because it came back. It was actually looking really good yesterday, but it's pulled back like everything else. It's got that scary shadow, but it does have that support area. In fact, I'd be comfortable if it were revisited right around the 82.5 mark, midpoint there, or even 80. It's not too bad. It's not out of play. It's still looking pretty decent for what it is. But AI, Darren and I were just talking about this. Here's a company that he created a Chat IQ, which is basically an artificial intelligence chat, smart learning thing. You can ask it a question, it'll just do it for you. Possible trades, it's parabolic. This thing just started charging for it. It was free. It's kind of their platform software, their launch software, but all sorts of cool things about it. So just straight up, this is almost like a coin flip. I do like it. It seems like you're chasing it. You can see it's come down quite a bit, but it did race to the moon today or Friday, and nothing else really did. Everything else kind of carried over. If you want to let it consolidate for a minute, that's great. But other than that, this is kind of an earnings play, and we thought it would be kind of fun to at least mention. All right, moving on to materials. We've got FCX from last week, down about 3.25%. It's looking like it's holding in there pretty decent, though. I do like the support that it's trying to find there at, what do we want to call that here, about the $43 level. You can see some of the larger candlesticks that it had last week, and it just kind of bunked its head at that 48 or 46, excuse me. So we could just have this upper base, this high channel. It's still playing within it. So as long as we got enough time left in this thing, I think it does have a chance. But today we're going to look at Cleveland Cliffs, another high base. Looked like it had a little bit of a hiccup today. It was confirming. It was looking a lot better than than it ended this morning. But possible trades on this. You got a vertical spread through February. You could diagonal this thing March into February 2022. And these are suggestions. What I like about these strikes, because when you zoom in, you guys can go a little deeper, or you can go a little more aggressive, a little bit more shallow. But this is kind of the stuff that Maverick likes to do, is give a couple choices of what we're looking at, but it doesn't mean that they're necessarily the best. I think a 22-23 diagonal spread would be kind of neat if you're aggressive. Now, I wouldn't do a 22-23 vertical, because I just don't think I want to have that gigantic target. And because if I'm a little early or a little late, you're punished. But the diagonal, you have flexibility. For you guys who are a little bit more reserved and think we're going to struggle, but you still want to play it, you can open this up wide, 21-23. You could do a 21-22 diagonal spread. There's a lot of different things you can do with this. And then let's do energy here. This is FANG. FANG's down $8.32, and it just kind of rolled over. I believe this was more of a consolidation sideways stock, and it just slipped a little bit here. We'll see where it finishes. It's right on a support there at about 137.5. I'll call it, just lower than 138 there. So if it can just stay there, we do have a crossover on this, so it was rolling over pretty decent. We'll see where that ends up. And then here's EQT. This is the one we want to look at for today. Beautiful descending triangle pattern, targeted butterfly, one of my favorites here. Patterns, I should say, patterns and strategies. Not saying it's the best chart. We'll find that out later. February 27.5, 30, 32.5. Once again, you could play with those numbers if you want to be less bearish, more aggressive, or it's totally up to you. But pretty good setup. It seems to be in the right place. We know that it's utilities and energy. They're not doing very well. They're not falling apart yet, but it is one of our weaker sectors. So it kind of stacks up nicely if you're the top-down approach.
So in conclusion, what we're looking at, we're really kind of focused on here. We had the break it on Thursday, yay team. Then we gave 2/3 of it back on Friday. So now the hands are in the air. We need a couple more confirmation days to decide what we need to do. Overall, though, we have to be bullish. Okay, there's nothing about this market that says go out and short me. There's stuff out there that says, hey, be cautious and make sure that I'm telling you the right thing. But there's nothing out there that says you have to be, you can be bearish this market at all. So what do you do in a market like this? You have to concentrate on portfolio allocation. Okay, that's going to be in your trading plan. Whatever you decide your market outlook is, you've got a grid that says I'm going to have X number of positions. This many are going to be bullish. This many are going to be neutral. This many are going to be bearish. Rely on your portfolio allocation. Okay, don't get into value traps. You only want to go long the strong stuff, and you only want to short the stuff that's already weak. All right. So this is the basic stuff that we go over. And just in markets like this, you've got to just rely on the basics. So what's going on? We've got how to trade options on TWS is going to be on Thursday. That's going to be a recording. And we've got our normal market roundups and midweek updates as well. So if you get a chance, please log into the forum on maverickTrading.com in the members area and put down your trades and let us know what you're thinking about as well. As always, good trade, everyone.
See you guys.